The economy did grow 0.3% in May as expected, but it may have shrunk in June. We're joined by Jean-François Perrault, Senior VP and Chief Economist at Scotiabank. Thanks very much for coming on the show.
Thanks, Andy.
What jumped out for you with this GDP report? I know the June negative read is very preliminary at this stage.
Yeah, I think a couple of things jumped out at me. Obviously, the June decline is a bit of an eye catcher. Can't say that it was expected. It's a little bit of a surprise on our end. A welcome surprise if it's true. Keeping in mind that we've been effectively trying, or the central bank's been trying to engineer a slowdown for some time. So perhaps this is the beginning of that, of that occurring. So there's that. That's a bit of a surprise. The other thing, though, is when you look at the May report and you, for instance, strip out what's happened on the oil and gas side related to the wildfires, you actually have a pretty strong month of May. So it's a bit of this kind of tension where the May data actually are very strong, 0.5 or above, depending on whether or not you take oil in and out, combined with some unanticipated weakness in the month of June. So it's a bit of a toss-up as to how you read this combination of data.
Is it fair to say that the steady, rapid increase in interest rates is slowing the economy at this stage? Is there any doubt about that?
Well, there's no question that things are slowing, and of course, likely slowing because of what the Bank of Canada has done. Now, we're not seeing overwhelming evidence that things are slamming shut. We're not seeing a huge amount of consumer pullback. If anything, so far this year, consumers have been stronger than expected. But there's no question. I mean, people are paying more for debt, and that is coming at the expense of other types of expenditures. I guess the question at this point is, is that impact of interest rates perceptible given what has been pretty resilient household behavior so far in this rate cycle?
What about wages? Are they increasing? I mean, we know that we've had that strike or averted dispute at the BC ports, for example. The public servants were in a dispute earlier this year. Are we seeing workers flexing their muscles and actually getting pay increases?
Absolutely. There has obviously been a lag between the pace at which wages have risen versus inflation, but we're getting to a point now where wages are rising more rapidly than inflation. Real wages, also depending which sector you're in, might be lagging inflation a little bit or not, but it's very clear based on the data that we're observing in the labor market that wages are now rising more rapidly than the inflation information that is coming in. So that's positive for workers, obviously makes it a little bit challenging for businesses, but that's probably one of the reasons this kind of household spending has been able to remain reasonably robust, combined with, of course, the fact that the labor market has been extremely strong for the last several quarters now.
Yeah, I mean, has there been a shift in power to the workers over the past couple of years? We keep hearing about labor shortages in some sectors.
I think so, right? I mean, labor shortages remain very high. Now, they came down a little bit yesterday, but they're still well into the 700,000s. So that's well above where it was pre-pandemic. So you combine these labor shortages with, high inflation, still strong demand for workers. And it has given workers a fair amount of power to go to the employers and say, especially kind of in the unionized world, and demanding pretty significant wage increases and other accommodations as well. It's kind of a historic development from that perspective, in that we have probably not been at a point in where labor relations have tilted so much in favor of workers in several decades, I would imagine.
What has caused this? I mean, is it partly the so-called Great Resignation during the pandemic, people dropping out of the workforce? What is causing these labor shortages?
Well, I think you've got to go back to, first the initial condition, which was pre-pandemic, there were labor shortages. They weren't as dramatic as they are now, but that was a consideration. Now, since then, I mean, you had a little bit of a resignation effect, not very much, but you've basically seen is the economy has been very strong, and employers have been looking to hire more and more people. So it's much more of a demand issue on the labor side than a supply issue in terms of lack of workers, because you've got some folks that are getting older, but you've also got a pretty significant influx of immigrants as well who are adding to the labor force. So really, from our perspective, as we kind of dissect what's happened in the labor market, we think it's much more of a demand issue rather than a supply issue that's kind of driving these shortages.
What do you mean? Sorry, a demand issue that's driving
So,
the.
employers are just looking for more people, and it's not that we're running out of people. It's that there are a lot of opportunities. There have been lots of opportunities on the business side. Businesses have been trying to capitalize on those by hiring folks, by filling positions, and they've been creating more jobs. They've been creating jobs at a sufficient pace that has swamped, if you will, anything that's happening on the supply side. So folks deciding to work or not, or immigrants coming into the country.
Do you think the Bank of Canada will feel compelled to hike again?
We don't think so. I mean, obviously the risks are tilted to them doing more rather than less. There's no question about that. But you look at, a report like today's, for instance, where, you can take some comfort from the June numbers that perhaps the economy is slowing, which of course is what they wanted to see. So the more evidence we have that things are turning the corner, that they might be slowing down, the better that is from a rate perspective. That is to say, the more comfortable they will be with rates where they are. So this is very much an environment where, bad news on the economic side is actually good news from a rate perspective. And of course, vice versa with the good economic news.
Yeah, it's always the paradox. Okay. What about the massive number of immigrants coming in? The government has stepped up the inflow. Is that not easing the labor tightness?
Absolutely. I mean, there's no question about it. So it's almost certainly the case that if you did not have the amount of immigrants flowing into the country that we do have now, you'd have higher wage pressures. So in some sense, what we're seeing is even though wage pressures are elevated, they're probably contained relative to what would be the case were we not tapping international labor markets to the extent that we are. I think the bigger challenge from an immigration perspective and a population perspective is, as the Bank of Canada has been trying to slow economic activity with higher interest rates, we are observing record population growth, right? Even the most recent monthly data, most rapid pace we've ever seen of population growth. And as these are new entrants, new arrivals, these are folks that are buying, they're consuming, they're participating in the economy, and they're probably at the margin pushing things in the opposite direction that the Bank of Canada is trying to engineer for the economy.
It's fascinating. Just leave us with a final thought, Jean-François, if you would, on we do have our economy growing, but we've had this wretched performance on improving productivity per head. Is there any sign of a turnaround in that?
There are no signs of a turnaround on that. It is, from our perspective, this is the #1 public policy challenge in the country. You cannot sustainably raise standard of living unless you have, an equivalent increase in productivity growth. And so far, that is just not what we're experiencing.
That's interesting stuff. The #1 public policy issue. Great talking to you, and thanks very much, Jean-François.
Well, thank you very much.